Carvana posting a big earnings beat as the used vehicle retailer reported a 46% increase in sales from the year prior. Joining us right now is Ernie Garcia. He is Carvana's co-founder and CEO. Good morning. Tell us what's going on. It almost feels like, are we back in the pandemic of some sort here?
Oh, wow. I think it's pretty different than that, but I think your last guest hit AI and tariffs. Now it's time to give people what they want and hit used cars. I think we're in a great spot. We had an incredible quarter. This last quarter, we were about twice as profitable as the average outside of us automotive retailer. We grew at 46%. The second fastest automotive retailer growth was 6%. The team's done an incredible job. We're in a great spot. We've got big goals in front of us. We're going to go tackle those goals, but things are great.
But what do you ascribe this sort of big move in the business?
So I think this may be a bit of a boring answer, but I think the move in the business, I think, is about 12 years of building something that's better for customers. I think, trying to make something that's truly different usually takes a long time. You have to design your systems in completely different ways. We've got a totally different supply chain. We've got a totally different customer experience. We've got a different way that we acquire cars and deliver cars. I think all of that work over a long period of time adds up, and then I think you can see pretty great results as a result of all that work. So I don't know that there's like an immediate macro driver of the success. So I think it's the team's done a great job.
But you've not said the T word yet. Tariffs, you think have no relationship to any of this?
I do not think so, but I'll give you the reason why. I think. Okay. Generally speaking, I think it's unclear. I think your last guest made it very clear that we don't quite know exactly where tariffs are going to go. So I think there's a level of uncertainty there. I think a business is likely to be impacted by tariffs based on how directly their input costs are affected by tariffs. I think, we sell used cars, and so to the extent tariffs flow through to steel or to cars, that would be on the new side. The used cars are already out there. I think tariffs are also likely to be impactful to the extent the product you sell is one that doesn't have or that has many substitutes. If you sell something on Amazon and there's 15 different options customers are choosing between, and your particular product goes up in price, you're not in a great spot. But with transportation, people need a car. So there's not a ton of substitutes. I don't think that we're a business that's likely to be super directly impacted, and I think in the long run that's especially true. But we'll see what happens, right? If tariffs come, that'll probably push our prices a bit. We'll see.
Maybe I'm completely ignorant or have a misimpression. My understanding from economists and some of the numbers that we've been seeing is that there's an expectation that used cars will do a lot better in a tariffed world, or even the concerns about tariffs will ultimately advance the used car market because the price of new cars will be that much more expensive. Am I not understanding?
No, I think that's directionally correct. I think to the extent new car prices go up, I think generally that would also pull up used car prices, but less. I think that would likely drive a substitution into used, which is what you're suggesting, which we expect would be positive. I think the sum of that is unclear, how that adds up, and is that a net positive or negative for us? But the thing that I think that we try to focus on is we know we can impact our customer experience every day, and so we try to stay really focused on that because we feel like we have 100% visibility and knowledge about how that works, and we'll see how tariffs work. But I think reasonable arguments could be made for us that it's a positive. I think reasonable arguments could be made that car prices go up, and that's a negative. I think we're going to focus on us and try to deliver the best experiences we can to customers, and that's our focal point.
What's your best margin business?
So our offering to customers is, you can sell your car to us or trade in a car. You can buy a car. You get financing. I would say when consumers buy a car, generally the decision they're making is that they want to buy a car. And I think the rest sort of surrounds that and is supporting of that overall transaction. So they need financing to get a car. They need to trade in a car, because they're going to use that to pay for the new car.
To you? Like which one of those?
I think the sum of the businesses is the decision the customer makes. And so I think the sum of the business is easier to evaluate the profitability. If you look over the last 20 years, most public automotive retailers have had very consistent EBITDA margins, but they've had profits at different points in time shift between the car, financing, or whatever else.
I think now it's service. It's always financing. If you want to pay in cash, it's not always very profitable for that car company, for that car dealer to sell it to you.
Yeah, so I think probably the traditional answer to that question is that the cars have become less profitable and the rest of the transactions become more profitable. I think our view is the sum of the transactions what matters the most because that's been very stable over a longer period of time. And so we focus on having all of those businesses so that
You're just worried about growing
we can make
market
sure.
Share.
We're worried about growing market share and the overall efficiency of the business, and I think we've had a lot of success there.
Hey, Ernie, one question I have, which is sort of maybe it's a 5 or 10 year out challenge. Do you imagine there's going to be a day where cars are so good, given AI and given the sort of self-driving features and even maybe some of the safety features, that there's sort of like an inflection point where people say, okay, if I'm buying a car, I really am not going to buy a used car right now because I really want to have this sort of like full-on next-gen thing that happens? Like that there's a step change. I mean, we talked about this at one point, I think, even with a combustion engine versus EV. Maybe that's different. But I wonder whether some of the safety features or some of the self-driving things, do you think, fundamentally change that?
Sure. So I think we will be rooting for technological progress in cars in general for a long time, and I think there's a lot of interesting things that can happen. I think EVs have been making a lot of headway. I think if you look around the world, there's EVs now with 500-mile ranges that charge in 5 or 10 minutes. That's pretty incredible. I think autonomy is an incredible opportunity, and I do think that as those features become available, it will have an impact on the broader market. I also think in the U.S. there's 270 million used cars driving around. There's around 16 million new cars sold every year, so it takes a while for that fleet to turn over, and we think there will be a very large business on both the new side and the used side for a long time. And I think our goal is going to be to make sure we have access to all those different cars, make sure that we put them in front of customers, let them make the right choice for them.